This is Taking Stock on Bloomberg. I'm Pimm Fox. All right, let's check in on the state of the Chinese telecom as well as the Chinese internet market with an expert. We have Paul Wu of Samsung Securities. Paul, welcome to Bloomberg.
Thank you.
Paul, before we get to Baidu, give me your thoughts on what you see in terms of subscriber growth having to do with the mobile business in China. You say that you think that we're going to hit a peak right about now.
Right. I think that we've, Chinese telcos penetration rate has reached a rate whereby all the big cities have already been reaching 100% penetration, and the incremental growth is all in the rural areas. So the incremental growth, we think, will be from low-end customers in rural China. So and overall growth will slow going forward.
So if that happens, does that mean that we're going to get increased competition amongst the incumbent carriers?
In the urban areas, absolutely. There's definitely increased competition. China Telecom and China Unicom have both built out their 3G networks and are competing head-on, offering more handset subsidies. And definitely China Mobile will be spending more on handset subsidies to try to retain its high-end customers.
All right, Paul, let's turn now to Baidu. I want to get your thoughts on Baidu.com. They are scheduled to report their earnings. They're coming out, I believe it's going to be tomorrow. What do you expect from Baidu.com? And explain this whole idea of what is Phoenix Nest and why is that so important?
Right. Phoenix, well, actually, Baidu just reported about half an hour ago.
That's right. Well, it's tomorrow there. Go ahead.
Right. They just reported their earnings that were actually ahead of street expectations, and their guide for the first quarter revenues actually are a bit higher than the street expectations. I think that Baidu shares are up about 10% in after hours. Now, Phoenix Nest is a new system for its customers to use to basically bid for keywords. It's keyword search on paid advertising, similar to what Google does. And they transitioned to this new system on December 1st. They required all of their customers to do so. There's a concern in the market was that this would have a significant impact on their revenues in the near term. It has had an impact. In fact, the revenues were in the first quarter will be down from the fourth quarter. However, I think that the rate of decline in revenues is better than street expectations, which is leading to the after-hours buoyancy in the stock.
What about the improving economy? I mean, is this where Baidu.com really is going to show growth? Is it dependent on small and medium-sized enterprises?
Absolutely. And improving China's economy will definitely help them. They have over 200,000 customers. Most of them are small and medium enterprises. And if the economy improves, then it will definitely be better for the overall for their major customers.
What about the senior management at Baidu.com? Are we going to see turmoil there?
Right. We did see the CTO and the COO both leave the company recently, separately in January. And yes, we are concerned about them leaving the company and the impact on Phoenix Nest. However, we spoke with the company recently, and they've said they have a very deep bench, and the overall operations of the company they didn't think would be impacted at all by these departures. Remember, these two senior managers only joined Baidu in 2008, so they weren't long-term veterans of the company.
What effect does Google's position in China have for Baidu.com investors?
Well, that's an interesting question. Google has about 30% market share for paid search in China. And as you know, they're recently thinking about pulling out of China completely. Obviously, this would have a positive impact on Baidu's market share. The question I have is, at current valuation levels, perhaps all of that's already baked in.
Let's turn our attention now to Sina.com. Tell me about this internet property and how buoyant is the advertising market?
Right. Sina.com relies heavily on brand advertising, kind of like the Yahoo of China. It is the #1 portal in China, and we think that it will definitely benefit from an improving economy. Its advertisers, unlike its main customers, unlike that of Baidu, are mainly large enterprises. They have about 700 advertisers in any given quarter, and we think that as the economy is improving, that they will see significant growth in their revenues. Remember, last year was a difficult year for Sina. They saw the revenues on the advertising side fall by about 12%. We see a reversal in that and seeing over 20% revenue top-line growth as the economy improves and as their top advertisers start spending more. their top advertisers are companies like industries such as the automobile industry, the telecom industry, food and beverage, etc.
What about Sina's ability to do streaming video as well as blogs? Is that also going to help the stock?
You know, that's more of a longer-term 2 or 3 year scenario. The company does expect to start monetizing that. They did start a streaming video site, which all of the content they're paying for. So it's all legal streaming video, and they're planning to monetize this through advertising.
All right, I want to thank you very much, Paul Wu, coming to us from Samsung Securities, talking about Sina.com as well as Baidu.